Market, creates price discovery. And at that second, what you're seeing is what you get. You don't have to like it. You don't have to agree with it. You don't have to do anything. But if you don't agree with it, that's when you start creating these personal biases, right? There's recency bias, there's personal biases, and then there's these people who draw lines and do all kinds of things. And I'm like, okay, whatever. But price is looking at you in the face and saying, this is the price to transact at this millisecond. You agree? Great. There's one person buying it, there's another person selling it, two people transacting with diametrically opposite opinions. Because the seller says it's going down, that's why I'm selling it. The buyer says it's going up, that's why I'm buying it. And that makes a market. Let's not argue with the markets. But on top of that, I don't want to keep talking about President Trump, but he's so active and he moves things so much that it's impossible not to talk about it. Okay? So right after that, he said the Fed should cut the rates by 100 basis points. A shock and awe is, he said, supercharge the markets, rocket ship, rocket fuel. I'm going like, huh? Cut the rates by 100 basis points at once? What has happened to interest rates? The Fed cut the rates 4 times. They're forecast to cut it maybe twice or probably once only this year. Why do we need lower interest rates? According to the unemployment numbers, everything's going well. According to inflation numbers, everything is going well. Fed is reaching its mandate, 2% inflation with full employment. Okay. Why does economy is not weakening? It looked like it was going into the, abyss about a month and a half ago when it sold off 25%. Everybody, the recession odds were going through the roof. And even then, the interest rates did not go down in the country. So Fed cut the rates 4 times, 50 basis points, 25 and 25. And the U.S. Treasury bond market is pricing rates higher. So Fed cut them 100 basis points. You look at that, which was September 18th. From that day on to today, right? The 20-year and the 30-year bond in the U.S. is up 100 basis points as opposed to down 100 basis points. Mortgages are at an all-time high of 7.5%. That's why housing is in the toilet. Nobody can afford a house. Okay. And the Trump, administration or President Trump saying, Fed, cut the rates by 100 basis points. We have all this Treasury refunding coming up, say $9 trillion worth. I've been talking about this. Who needs lower interest rates the most? The U.S. government does. We have close to 9 trillion notes, bonds maturing this year. Well, we cannot just say, I'm just not going to pay for that IOU. Well, no, they're maturing. You have to give these people their money back. They waited 5, 6, 10, 20 years, 30 years. These bonds are maturing. Well, since our house is not in order, since Dodge did not work, since Elon is fired, since kick the can down the road, since the big beautiful bill is coming now with another $3 trillion in national debt added on top of everything else, what do we have to do? We have to issue new bonds. Well, when we issue these bonds, the buyer of these bonds is going to go, okay, what is my return? I'm going to hold this thing for 20, 30 years. I don't want 4.5, I want 5. Okay. Well, if we start paying 5 and the maturing bonds are at 3%, our cost of interest in this country is going up. Just like figure we have this amazing credit card with unlimited credit, right? We keep swiping. And the interest rates just keep going up on that. Like on a personal basis, if you're carrying balances, you're paying 30% interest rates if you're lucky. Well, the U.S. government is not that bad, so they're going to pay 5%. Well, that 5% on average is about 1.5% higher than the maturing ones. That means our interest cost, just interest cost alone in this country this year is going to be about $1.5 trillion with a T, just the interest cost. How can this go on? How could it go on? Okay. I know we have the endless bottomless pit of money printers, but how can this go on? Every 100 days, debt going up by $1 trillion. Okay, interest rate servicing of these IOUs, bonds, notes, whatever they are, treasuries, is 1.2, 1.5 trillion a year. That's 50% more than all the social services we provide in this country. And that's double our defense budget. Literally, that's money put on fire. Like, it doesn't serve any purpose. It goes and somebody's collecting interest on that. I'm not getting it. So President Trump is wrong. Fed is not going to cut the rates. Fed doesn't have to cut the rates. Economy is not slowing down. Look at gold. Gold has made a new high recently, right? Look at Bitcoin hanging in there. Why? Look at bond market. You know, the 20 years are 4.5, 30 years are, is 5%. Why are interest rates not going down? Because we're not going in a slowdown. We don't need lower interest rates. So President Trump saying, oh, lower the rates by 100 basis points, give it a rocket fuel. I'm like, we don't need rocket fuel. We already got the rocket fuel. So, yeah, that's unemployment for you. The hocus-pocus. All this continues. Just, oh, great. We have great numbers. Oh, next month when we announce this month's beat, we're just going to revise the other one downward. But nobody's going to pay attention to that. Like, I must be the dumb one in the room, I'm saying. Every time I get an unemployment number or an inflation number, I go to myself, I must be the dumb one in the room. Maybe I am, maybe I'm not. But, yeah. So that's that. It's it's laughable. It's laughable. It really is laughable. So today's theme is the Jerry Springer Show. We have Jerry Springer Show going live in Washington. And we have Jerry Springer going live on every economic data that comes out of Washington. There you go. Yep, welcome to Jerry Springer. I agree 100%. There is no ifs and buts about it. All right, let's answer some more questions. Yeah, it's true. I don't know. Is he dead, by the way?